What's up, guys? Brendan from Market Makers. Hope you all are having a fantastic Friday. Guys, Bitcoin is gearing up for an explosive move. They spend some money. They change the market structure. This is why we do TA Daily. This is going to be a pump, it looks like, guys. It's gearing up for a pump. Let's get into the data. Let's see if this is something that can be organic and sustain once they pump it, or if it's going to turn around and be yet another massive bull trap, liquidity trap. We've been talking about this possibility for almost 2 weeks now, guys. Let's take a look at the data. So you can see right here, this blue line, guys, is a 200 moving average. The 200 moving average, again, I went over this yesterday. I have multiple videos on it, but it is 6.5 months of trading range. It's a hallmark signifier for the health and welfare of the market. And as you know, since May 12th, we have been in a bear cycle in crypto, okay? So they spent some money and they pumped it up. You lost this 200 moving average in the hourly, okay? You see this, you lost it in the hourly. And what changed yesterday was the night before on the candle close, you lost it on the daily. That pump got you back above it on the daily. On the 4-hour, you were still above it. You were never below it, okay? That was the last Mohican. So my thesis here is, my premise is, you don't spend the money to pump above a key support average without spending the money to continuation pump, okay? And it's sitting here waiting, and my guess is it's waiting towards the afternoon East Coast time when the banks and institutions start to close at 4 to 5 o'clock Eastern, okay? That would be my guess. So what you need to do is you need to watch this. We got to look at our metrics, got to look at our indicators, because you need to gauge how successful this is going to be and if the price can hold up here. That's the big unknown. Can the price hold up here, or is it going to print bearish patterns and be a massive liquidity trap? Let's look at our support and resistance levels, guys. Before we do that, let me show you this. So what we're going to look at, part of the way we're going to analyze this pump when it happens, okay? This example right here in trend, this was basically a head and this turned into a head and shoulders, but what the whales like to do is pump it up, retail comes in after you, supports the price, and then they turn around and they dump the market, okay? You get FOMO in with the pumps, and then they dump it, and they make money on the way down. We've been over this in another video. Here's another example of it. I'm expecting this pump, by the way, to look very similar to this. You're going to see a straight line up and then another line, maybe a tiny bit of consolidation in between. That's how you know. That's just a hallmark indicator that that is a whale pump, and you can see that in the tools that I gave you guys. Check this out. The PVT, right? This measures money flow into the asset, and it does a calculation to show you the volume candle required. Look how tiny this volume candle is that's required right here. It's this volume level to get this pump up here. All this volume afterwards is retail, and look what happens when they let it go. The volume drops off, and then look at a trend. Of course, it's always at a trend, guys. The relative volume does price, time segmented price and volume calculations to give you how much at a trend that volume level is. I made a video for you guys. I showed you where to download these indicators. Go on the channel. I think almost 3,000 people have watched it now. This is how you whale hunt. It's called whale hunting, so download that, okay? But you can see it at a trend just by looking at the relative volume. They pumped it here and they dumped it here, okay? That's the dissension candle. They make money in the middle. Notice they did absolutely nothing in the middle, yet you have all the volume. The peak volume is all in the middle. That's the FOMO retail people that they dunk on, and that's why it's so dangerous to watch this happen in this above the 48K range. You need to be very aware this move can happen because they've done it multiple times in trend, okay? Right here, you're going to see needles like this. You need to look at your relative volume, how much at a trend that is, 2 times at a trend, and then they pump it again. They get it up here, and then you see the short hunt candle right there. Guys, that's, just watch, look at the indicators. Indicators don't tell you everything, but it gives you a partial telling of the story, and you got to use common sense with this stuff too, okay? So just pay attention to this because I don't want anybody to buy into something that's not organic, that's going to fall apart. All right, so let's look at our support resistance levels. Let's look at the Gann Square 9. Let's see what our TEMAs are doing. Let's pull this back over. So Gann Square 9, you are trading above support, obviously, at 47.4. You're at the 48K. I mean, how accurate was this 48K, by the way, that I gave you almost 2 weeks ago? Gave you on the dollar, and you see price hitting it twice, 3 times, and now 4 times. on the dollar, okay? This was based off of volume analysis. And the reason that's important is because we're going to look at volume in the 4-hour time frame. Everything looks healthy here. Everything looks good for a continuation pump. Let me turn off that 200 so you're not confused by the noise. You do have a bullish cross on the TEMAs right here. So everything is healthy for a continuation pump up. Be aware of that. What is our, let's check out the ATR real quick to see where volatility is. Volatility is dropping some. Like explosive moves, see down here on my baseline? This is where you could easily see a major explosive move. This could jump up at any time, but look for this to start moving down some more, because the more it moves down, the more explosive the move can be, okay? And you can see that right there. Boom, look at that V-shaped explosive move. All right, let's check out the 4-hour time frame. 4-hour time frame, I'm going to use volume here, guys. You can see our macro pattern is still in play. However, this pump, I told you to watch it yesterday, is right at that 48K level. And when you look at the volume, guys, this is how we did this analysis to begin with. Even with all this trading, look at all this trading here. You can still see where the massive amount of support is down here, right? This white line's your point of confluence, your point of control. This is peak volume in the range. And when you look at this, if they pump it up, right, this is why I said all along in this kill box, the only way they can move the price is with pumps. And you've seen that over and over again, and this isn't any, these two candles, this is no better. Okay, they have to really pump this up if they want to get to that corrective market structure at 52K. And again, that's a technical term, the corrective market structure. That is where Bitcoin is no longer technically in a bear market. That is when Bitcoin is in a corrective market, which is less than 20% price declination. So at 52K, Bitcoin is at minus 19%. It's kind of crazy when you think about it. It's been over 20% negative for 3 months. But you see where the peak volume is. It's up here. But they're not going to pump it up to here, and you're not going to wait for them to pump it up here to buy. You're missing out. You want to buy in bear market, but you want to buy where your price is supported and not in a bull trap or a dead cat bounce. This is why this corrective market structure area is going to be very important, guys, because it's highly likely, it is still highly likely, and we have to see patterns, but it's highly likely you're going to get the straight line pump up. FOMO is going to come in. You're going to just start rolling over. And people are going to buy again because they feel like they're missing out. And you're going to make a double top or head and shoulders. And you can come right back down into this range. This could very easily happen, guys. Look, can it also just continue to pump up? Yes, that's why we need candles. Because you got to understand, in any range in trading, in any range, even after the pump, it always comes back for some type of retest for support level, okay? So you're not missing out if you wait and see what prints. Don't expect a straight line up to 65K. It's going to come back. It's going to make chop. It's going to consolidate. You will have opportunities to invest. And we're going to be trading in this range if we can catch the pump and if we can catch a dump. We're going to be trading this range. I don't know if I'm investing until I see candles print, but they're gearing up for this pump, guys. It's at 47,938 right now. Be very aware of it. Watch it. Use your indicators. Understand what you're buying into. And when I say understand what you're buying into, look, whales pump in every time frame in almost all the coins. That's not the problem. Just because it's a whale pump doesn't mean it's bad. What's bad is if you don't have the volume to support it and if retail doesn't support it. And again, I'm operating under the current trend, which has been retail has not supported the price in this level, which, as you guys know, every video I draw all the bearish shapes and patterns we've been making. And if you look at the macro trend, even at the macro level, prior to this pump where they pumped it back up, look what the price was doing. Very easy to draw a visual line. It was descending back down to this support level, and then from there it was going to come down and to another support level of this candle cluster, okay? That's the natural price movement, so they pumped it up to get above a key moving average. I expect a continuation pump. I expect it to come to the corrective market area in this range, and I expect it to make bearish shapes, and I'm expecting to not invest here unless I see stability, because this hasn't been stability in the kill box. We as a group are not buying for the long term when we see constant bearish shapes and then the price descension, and then it takes, once again, a whale pump to get you above key resistance. We have a professional who does market intelligence in our room with Glassnode. He owns a market intelligence company in real life. And we see that the smaller wallets, the 1K wallets, have been selling. We see that the 10K wallets have basically been holding. They've been kind of frozen. And the largest wallets drove this price buying in the kill box. The 100K Bitcoin wallets and up drove this price buying, okay? So that tells me the middleman isn't buying it. They either don't believe it or they're waiting, okay? USDT inflow is still up some, but it's flatlining. That can mean two things. People loading up with Tether because they're expecting a dump, or they're expecting a pump. So you got to play this out. We need candles to print to see what happens. I do expect, again, my continuation of the thesis is that this will come up. It will make bearish shapes. It will be up here. YouTube will go absolutely berserk. See, told you, Bitcoin melted your face. And I do expect it to return down. And if it doesn't return down and it becomes stable, we're going to be looking to invest, guys. So the video series could change after the next couple of videos. We got to see what happens, but just watch this because they're gearing up for a pump and they're probably going to wait until later in the afternoon, but they can do it at any time they want. The whales and institutions own half the Bitcoin in circulation. Be guarded with your money. Be protective. Walter White out. Guys, another video update coming. That's a little bit of a joke because everybody says I look like Walter White from Breaking Bad. But guys, take care. And if anything crazy happens, I'll update you on YouTube as well. Talk soon.